definitely stay in touch with us as you get married and you move out to Missouri. There's so much that we can probably partner together to do.
Yeah, I mean, it's
Especially
stable and cheap out there, and the cash flow is really good. And like right now, they've already reopened, and that state is super. I like to say free. You know, they're just doing their own thing.
yeah,
But yeah, like I said, probably going to be moving out to Hawaii like another 10 years after that. It's very early to tell, but definitely going to move back to Kaneohe at some point. So it's super
nice.
cool getting in touch with you guys because a lot of you guys are out there, and we'll have to network some more.
That's awesome. Yeah, no, definitely we'll stay in touch for sure. So
Yeah,
thanks
right
for
on.
joining us.
Yeah, happy Aloha Friday.
Yeah, Aloha Friday. Ashley Watson, welcome. Troy Dennis, you're out there in the sunshine today. Nice.
Sunny Seattle, baby.
So look at you. Are you on your back deck or what? It's beautiful.
Yeah, this is the front deck, back deck. Yep.
Nice. That's awesome. How's everything in the Disney Empire today? Doing well.
According to some analysts, still losing 30 million a day. Well, now that Shanghai's open, it's probably not as bad, but still, hasn't been great lately. But it'll open up.
30 million a day. Wow.
That's what some.
Well, they shut down all the Disney parks, right? So they opened up the one in Shanghai opened up, and that's the only Disney park in the world open right now, right?
Yeah, just for full magnitude, right? I mean, there's no sports, right? So you can imagine the impact to ESPN, one of the biggest revenue generators for the company. Number one revenue generator at, I don't know how many, 28, 30 billion a year is the parks. Those are all shut down. All the cruise lines are docked. There's no movie productions. There's no TV studio productions. Television news, advertising is down. People don't want to be associated with the COVID-19. So the list goes on and on. So yeah, big impact. But it's good. I'm still long on Disney, so don't go out there selling low. Time to buy.
Yeah, I know, exactly. Actually, you know what's a funny story is my very first house I bought at 20 years old, and I used Disney stocks to buy it because I'd used all of my paper route money when I was a kid to buy stocks. And so, yeah, I'm a massive Disney fan. So we thank you for all you guys do at Disney to make our lives happier.
Yeah.
Thanks for joining us. Tyler Vandeman, all the way from, are you Maui right now or where are you at?
Let me find my unmute button. Yeah, man. Maui. Locked a bit
Maui.
away from my little ones right now, locked in a different type of cage in an office. But yeah, all the way from Maui right now.
That's awesome. Maui's nice out there right now.
It is nice. There's some waves. I think after this one, I'm going to go grab a board, jump in the water. Been on calls all morning, so ready to get a break.
Nah, take a break. Go out and do it while you can, man.
Right?
Before they shut down the beaches again because of a second wave, right?
Somebody just told me I think they're going to finally open up the beaches. Because like right now, it's either you're in your car or you run across the sand and you jump in the water.
Right.
There's like no in between. So with 3 kids, it's not fun. It's not fun.
Yeah, you're like, run to the water as fast as you can and we'll get a ticket. Funny story,
Yep.
Alex, who's on our Keiko team out of San Diego, he went jogging down the wrong path, got himself a $1,000 ticket. Oh, sorry, Alex, was we supposed to tell everybody that?
But my girlfriend got $1,000 ticket too. $2,000.
$2,000.
2,000.
Bro, that's
One I went on, but it was a good one.
That's what you
got
get
a
for
suit on?
exercise. That's what you get for exercising, Alex. I tell you every day.
yeah.
Alex, what was it for? Was it really just for running?
Being on the trail, they'd closed all trails, parks, and beaches. You were not allowed to be on the trails. I was like, wait, so I can run on the sidewalk, but I can't run on this trail, which is essentially like a sidewalk? They're like, yeah, that's right. I was like, okay, thank you.
Thanks for my $2,000 running experience.
Wow.
That's crazy. That's crazy.
I want to
All
know
right.
where Loretta and Jim are. Where are you guys located? Hawaii or? Oh, sorry, you're muted.
Hi guys, we're on the Big Island. Originally from the UK, but live in Hawaii.
North Kahala.
Oh, nice. Beautiful on the
Yes.
Big Island.
Yay.
Wow.
And we're good friends of Fuzzy.
Oh, right on. Yeah, that's right. Fuzzy's from the Big Island too, so that's awesome. Man, I could listen to your accent the whole time. Can you just keep talking for a couple hours?
Oh, behave.
That's awesome. Well, welcome. We're glad that you're with us.
Thank you. Good to be here.
Thank you.
Yeah,
What
Cassie.
about your singing agent. Sorry, that's the only name that comes up.
That's hilarious. Hi, good morning. I'm Nicole Lemus. I'm here at my list in Ka'ava and just wanted to jump on and listen.
Yay! So you know that if you're gonna name yourself singing agent, we're gonna need to call you out. So
I knew you were gonna say that.
What tune you got that you're gonna share?
Name the tune. I got.
Oh, for real? Wow. I don't know. What's your favorite? What did you sing last?
What did I sing last? I sang a cheesy song, like an uplifting song for COVID relief for Rotary International. It was like not that cool.
Oh, okay. What's your favorite song? If you were to sing in the shower and you don't think about it, what comes out of your mouth?
Well, a song that I was just listening to this morning was like an old school one. L is for the way you look at me. O is for the only one I see. V is very, very. That's all.
That is beautiful. Sweet.
I know how we're closing out the call. Get ready.
There you go.
Hana ho. We're going to start the call every week with just you singing for the first 5 minutes.
She can sing the national, Kakao, have her sing the national anthem to start.
Oh, I can totally do that. No, you don't even know. The LA Clippers come here and I'm their anthem girls. They come here every year. The national anthem for the Clippers at the Stan Sheriff Center. Don't tempt me with.
That is awesome. Does everybody want to hear her sing the national anthem to kick us off?
We have a couple minutes to spare. I'm good.
Do you seriously want to do it?
Are we ready to rock and roll?
I'll do it.
Oh.
Period. No worries.
Let's do this.
Then do it. Do it. That'd be fantastic. That'd be awesome. And then we'll kick off right after that. So
I'll do the quicker pace so we can like get to the show. Okay, ready?
Perfect.
Everybody, hats off, and you're da-da-da-da, right? All right. Oh, say, can you see by the dawn's early light what so proudly we hailed at the twilight's last gleaming, whose broad stripes and bright stars through the perilous fight o'er the ramparts we watched were so gallantly streaming, and the rockets ran clear. Didn't practice yet. The bombs bursting in air gave proof through the night that our flag was still there. Oh, say, does that star-spangled banner yet wave for the land of the free and the home of the brave?
Woo!
There you go.
Yay.
That was fantastic.
Thank you. Thank you very
Cassie
much.
Chun said in the chat, proud to be an American. You have inspired us to kick us off. So I don't know if we could follow that. I think we just end the call for this week. We've been inspired. We're ready. That was fantastic. Thanks for joining us and for sharing that music. That's gorgeous. So, hey, welcome everybody. Thanks for joining us. We have folks on the call literally from around the world and all over from the East Coast to the Midwest to the West Coast. So super glad that you're all on, taking a little bit of time to join us. We've been doing this on Fridays, as you know, and just kind of taking a look at what's going on with the pandemic and all of that is happening in the economy. And last couple of weeks, as you've heard, Corey and I did a lot of talking and sharing. A lot of you got a lot of good information, and you got the deal analysis last week. If you didn't get it, jump on our Facebook page, which Justin, where do you want us to go for Facebook?
Yeah, so it's on a Facebook group called Keiko Exchange, and I'm actually gonna just get the link and post it in the chat so you guys can join it now after. We just look forward to expanding that page, and I'll send the link.
That'd be awesome. So yeah, if you didn't get a copy of the deal analysis spreadsheet that Corey and I use for all of our off-market, on-market real estate transactions that we purchased to flip, then jump on the Facebook page, grab it. If you got questions, just let us know. That's just our heart as a company, is that we'll give away everything. So if you need anything at all, just let us know. We're happy to share. We've been doing this a while. We've had lots of really good opportunities, lots of successes. We've also had plenty of failures as well. So again, we started this, gosh, almost a month ago. Is it, Corey, has it been like 5 weeks already that we just started chatting, having a coffee talk?
I think so. Is this our fourth or fifth one? I think.
This is our fifth one.
When we started it, really just because Corey and I talk all the time and we're always talking about the market, and then many of you are having conversations as well. So we just really organized ourselves to let everybody jump in, and that way we can all talk about what's happening. I mean, obviously the pandemic has changed the world, and all of us that are real estate investors or soon to be, or you've been an investor for a long time, it's a really crazy season. And so we're just grateful that you're on the call today. We're going to jump right in, but Corey, do you have any opening remarks that you want to make?
No, just again, thanking everybody to jump on. We never really expected this to be anything like that we kind of kept going. But now that I see that, people still come to the calls, and we're building great relationships, and hopefully, putting deals together and helping each other. That was the whole kind of idea behind Kiko and I wanting to start. And with the team, actually it was a team decision because we all are super busy, right? And I'm sure everybody on the call is as well. So, but this has turned out to be something that's actually really inspiring for us to get to meet everybody from like even out of the country. So thank you guys for coming on.
Brother, first of all, you need to go buy one razor. What's up with your face, man? It's time to shave. What kind of excuse you got?
I know, it's kind of scruffy. It's the COVID. It's the COVID.
Yeah.
My guy John Rankin though, I'm loving the stash over there.
I don't see.
It's my quarantine mustache. It's going on 6-7 weeks now.
Holy smokes. Nice. Well, again, welcome everybody. We're glad that you're with us. We're gonna do a couple things today, and we're really hoping that all of you would be willing to share just a little bit. And I know it's always a little bit, like everyone's gonna hear what I have to think, and do I have anything worthwhile to share? And the answer is absolutely yes, because we're obviously going through a very interesting season. As all of us have heard, the economy is going to be severely impacted by this pandemic. There's not going to be a single industry that probably will escape it, except Amazon. Amazon, I think if anybody really wanted to figure out who started the coronavirus, I'm going to guess it's Amazon, since they're probably doing the best of everybody else. But in all seriousness, it's going to be a real challenging economy ahead. Today, we are really just hoping that all of us will just add a little bit to the conversation. We have a couple questions we want to all just share on. And I'd love to hear from everybody who's willing to share. We said last week that we're going to talk this week about a couple of questions. The first question is, are you bullish or bearish in regards to the real estate market? Bullish just means that you think that the market's strong. It's going to get stronger. Everything's looking solid. Economy is going to keep growing. And if you are bearish on the market, that means that you are feeling like the market is going to decline, things are going to drop, and the economy is going to drop. So bullish, growth, bearish, decline, essentially. So that's the main question. And then the second question is, why do you believe that? Like, did you read anything? Did you see something? And then the third question, which is the most interesting, is the question of what are you doing in light of the market that you believe it's going to be? So if you're saying, hey, I'm bullish, then it's like, well, what are you doing in preparation? And that's where I think we're going to get the most insights, is off of the rest of us who are doing certain things, trying out certain initiatives, so that way we can be ready for the market that lies ahead. And then, and that's going to be the three major questions. So I wanted to throw that out there to just get you thinking. Some of you have been thinking all week about it, so that's awesome. But at the same time, for those of you who are just jumping on, we would love to have you give us your perspective on those questions. But let's start off first while we let you have some time to think. Anybody have anything? This is the section that we call, because we don't have a better name for it, gets and gots. So do you have something? Do you need something? And this is the time to just kind of share, hey, I need a wholesaler, or hey, I need a loan on this. I need a private investor. So if you've got anything, or if you need to get something, this will be the time. I'll start off. Up here in Seattle, we have a couple of wholesale properties that are coming online that are pretty solid. So Tomas, are you on? Do you have a couple minutes to talk a couple about some of the off markets that you have going that you can just let people know about?
Yes, hello. Can everybody hear me?
You look like you're so cold. Nice jacket.
I know, it's nice and red and puffy. Yeah, I mean, we have a few properties that we're working on right now. They're wholesale deals. There's a single family residential one in Lakewood, and that's near JBLM, which is a military base in Washington. And I'm trying to think of the few other ones that we have. We have a few land deals that we're working on as well. So we're really trying to figure out is if they're, I mean, we always try to think about the end buyer in mind. So we're really just trying to connect with developers that are still buying amidst this COVID season. So if you're a developer and you're wanting to buy, I'd love to connect with you because we have a few opportunities that we think would really make a lot of sense. So feel free to just drop your email down below and we'd be happy to connect with you afterwards.
So yeah, Tomas is working on a couple big deals. We've got a 10 unit in Spanaway that's off market right now. We have an 8 unit in Renton right by the Seahawks fields. And then, yeah, a couple of development properties. So that's what he's got. And if you are looking to do a flip or do something like that, then that's some Washington stuff for you. Anybody else got something or you need something that you'd like to throw out to everybody right now?
Yeah, I'd like to, if I may. We came to the Big Island for affordable housing. We think it's strong still. The only thing that's holding us back is working capital, workable working capital. We can get HML money, no problem. Hard money lending and also private money lending. But we'd like more institutionalized lending to build at least one property a year. A month. No. Yeah, 1 a month, sorry. We have 10 in the pipeline at the moment, and we're looking for capital to not do the one every 2 or 3 months. We're looking to do 1 a month. So if anyone's interested in affordable housing, Big Island, we think it's solid. The reports from the economists are solid on the Big Island, so we're hopeful. In short, we're bullish about the future. So anyone interested, love to hear from you.
Yeah, so just to reiterate that, so you have private capital, you have private investors, and you have hard money access.
Well, everyone, yes, it's not hard getting hard money nowadays. It's just whether or not you want to play the terms. We'd like to go institutionalized, but in the meantime, rather than waiting for the banks or the credit unions to sort themselves out, we're happy to look at private capital to ramp up the production.
Yeah. Awesome. So Alex, definitely touch base with them after. So if you haven't talked with Alex out of our San Diego office, he would be great to touch base with because we may be able to get you hooked up with some funds.
Sounds great. Thank you.
Yeah, absolutely. Happy to do that. Thank you for sharing. Anybody have something, that you're looking to unload or trying to find?
Aloha, good morning.
Good morning.
Hi, this is Kavanna here.
Hey, how are you?
Good, calling in from Makaha. Don't mind me in my pajamas and 4 kids.
Yeah, good. Look great.
So I'm a good friend of Fozzie's. We have sort of like distantly collaborated on projects, never directly worked together. So he invited me on the call. I'm very grateful. Thank you. And I bought a 2-acre farm in Makaha Valley Road about 6 months ago. I'm looking to get it to cash flow. So I want to do a mixed use. There is a house on it that I currently have a tenant in that is not as pono as we thought. We definitely tried to do a community service by making it a Section 8 available home. And while I'm grateful for the guaranteed rent, it is far less than what we can actually get for the house. And we've just put in a new easement road, and I could definitely get, different farmers or what have you in there, but we definitely want to cash flow the property. I see it, being able to pull about 10 grand a month. And right now we're at the 3 mark. So I'm looking for potential investors. We need to maybe carve out a few different pastures. We could do horses, chicken farming, co-op. There's lots of options. And I know as like a native Hawaiian, I'm really all about helping Hawaiians buy land back, not necessarily just a hale or a house, but, starting to capture what increases in value. The homes definitely decrease and the land increases. So I'm just kind of putting the feelers out in terms of that.
Nice. That's awesome. So just to clarify, you're looking to build chicken farms or chicken fights?
Well, I actually have, the land is like an 80-year-old farm. There's mangoes there, there's everything. And so I actually have like a 4,000 square foot enclosure that literally used to host chicken fights. There's fly coops, there's all kinds. So,
so
we're prepped in prime for, we're prepped in prime for the cash flow. But anything will grow because of all the, you know, the chickens and goats that used to be there. Anything will grow, and it is already a verdant, fruitful place.
That is awesome. Sweet. Yeah. So if anybody wants to just throw in the chat, can you just throw your email in the chat with your phone number? And then that way, if anybody's interested, they can jump on, and that would be awesome. Yeah, Makaha's a nice area out there. Sweet. Anybody else got something? You need to get something?
I got something.
Okay.
So speaking of Makaha, and kind of just reminded me, we're gonna have 10 houses coming up soon, in the next few months out there, brand new ground up construction, ranging anywhere from a 3-bed 2-bath 1,100 square foot house to 4-bed 2-bath 1,800 square feet, and that'll be, we're going to be pre-selling them soon. Ashley and the team are going to be are pre-selling these houses, but we're going to be looking for buyers. So if there's any realtors on here that have buyers looking in Makaha, Covina, then please feel free to reach out to us, or Ashley Wasson is on the call.
Okay.
Thank you
so
so
I
much.
my national realty exam yesterday.
Nice.
And the 10 homes that you guys are speaking of are right outside my back door. So I built a brand new beach house here 2 years ago, and I'm hiring Fozzie and Moats to build out the next level of my home currently.
Awesome.
So I'm looking for a little bit more maybe cash capital to finish that project. And yes, I'm working with another partner and team from Keller Williams. So we would love to help find you some buyers for these homes.
Thank you so much.
They're literally right outside my back door, like a stone's throw away, the flag lots, yeah?
Yep.
And it's just a great opportunity, especially with, you know, Tiger Woods buying the golf course, the resort is going to get rebuilt. And so even for that, the farm that we have, because we put in an easement road and gravelled it, I'm open to doing, of course I'm getting all these alerts coming through, excuse me. You know, I'm open for like housing construction trucks and crew, and there's a lot of boom and stuff happening out here because Kapolei is really our next city, right? There's everything in Kapolei now that Honolulu and Kailua had to offer, all the way down to Kalapawai Cafe. So if and when we open back up, you know, and have some sense of normalcy, but I definitely believe like people are coming west. I can see it every day. And so I'm definitely on that bandwagon to help you guys.
Thank you.
That's awesome. We appreciate it. Sweet. Anybody got anything else you're looking for or you need? Can be anywhere in the country.
I have something.
Yeah.
So I'm in commercial real estate here in Hawaii. I have 3 off-market multifamilies, 7-unit, 9-unit, and 15-unit. I can send you more information. The price is kind of fluid right now because I have a fact sheet on there. But the 15-unit is resort zoned in Waikiki, so possibility that could be a good investment, you know, once tourism comes back. But
How many
if
units
anyone,
is that one, the resort zone?
What's that?
How many units is the resort zoned one?
15-unit.
Corey and I'll take that one.
Asking price on that because we have a buyer. This is another thing. We have a big buyer looking to purchase underperforming hotels right now. So
okay.
What's the price point on that one?
So the guy, I think the guy bought back in October for like 3.6, and he was looking at like 5, but that was pre-COVID, and he wanted me to market it off market. But he flips. What this guy does is he flips these buildings and he rents them out as youth hostels. So he'll put 6 to 8 beds per unit, and he'll rent each bed out for like $30 a night. And it was doing really well. He also gets income. He has like a a tour, a moped tour company that rents there for $5,000 a month. It's easy to get liquor license, so he has a rooftop bar. This is with his other project. He has a rooftop bar, which he would get 50 to 100 grand per year in liquor sales. And then he rents out also the beach like equipment, like chairs and surfboards and everything. So he gets multiple streams of income. It's a pretty interesting business model out there.
Is he open to seller financing of any sort, or he wants cash offer or financed offer?
He's a pretty eccentric guy, older Japanese guy. And in his words, I like cash. I like big bucks. So, yeah, he probably just like cash offers for the most part.
Sweet.
Cool.
It's a time to
you bought my phone or what?
Oh, actually, I did.
Oh,
No
you
lie.
did? Oh, I was totally kidding. Oh, bro.
2 of them. One for me, one for you.
Right on, bro.
Sweet. He needs it. Right on. That's awesome. Thanks for sharing on that one. That's fantastic. And thanks for the haircut.
Yeah, I'll throw my info below too.
Yes.
I'm kind of out and about today, so I'll get to it. If you guys want to email me, I can get to it later today.
Yeah.
Once I'm stationary, don't wanna Zoom and email and drive at the same time, but I can just kind of hold it here. And if anyone has any other questions, let me know in the chat or email me, text me, call me, whatever.
Sweet. That sounds good. Looks like you got some good stuff going on. Thanks, Lauren. Anybody else got anything on that side? You got something, get something, need something?
Yeah, guys, I have something. Corey did mention that we're looking for underperforming hotels, but we're looking for loan tapes. We'll take a loan tape of performing, non-performing assets. Anything that is discounted right now with COVID prices, we would love to look at across all asset classes, land, hotels, industrial buildings, anything you come across that is non-performing or performing that's being sold as a discount. We have a huge buyer. And then also I did talk about, massive deals. We're looking at a $2.1 billion development in Las Vegas because I shared this information, and we have a group that's actually looking at potentially buying that development. So we're looking for the crazy huge things too. So if you hear of it, it's, it's worth sharing that information because, 1 point on $1 billion is 10 million. So I'm pretty sure we could figure out how to split up 10 million between a couple people for a referral. So just keep that in mind, guys. Thank you.
Awesome. Sweet. Anybody else? So those who can move on to the questions. Good stuff. Sweet. Well, again, welcome everybody. I wanted to just jump into the questions because that's where I think we're going to all learn some pretty cool things with regard to what you're thinking in this season. As all of us on this call are probably familiar with, this is that moment in history that we've all been waiting for a while. Some of us missed out on the market when the subprime hit, and we wish we would have bought more. And we look back at that season, and everybody we know who did buy anything is now sitting on a real estate gold mine because of the appreciation that has come after the decline of the subprime. So we're in a very, very historical time in history. Definitely don't want to necessarily say, hey, we're grateful for COVID and all this, pandemic, but at the same time, sometimes life throws us challenges, and it's what we do in the challenges that really determine our future destiny. And so we have an opportunity, all of us as real estate investors, is to take a look at the world from a little different lens and to see that despite the challenges that are here and turning on the news and there's all kinds of crisis that's happening and unemployment in the nation, highest probably in history, and a lot of things are going to continue to happen that are going to be very, very indicative of a recession, if you will. And then, of course, you add to the fact that so many of the states are opening up, and we only need to look to certain countries who opened up too quick, and then a second wave hit. And so we've got economists predicting as well, and even medical professionals suggesting that this fall, we'll probably get another wave and another lockdown. So it's going to be quite an interesting season ahead. So the question that we're challenging ourselves with today that we'd love to hear about is, do you feel bullish or bearish on the market? And kind of, what made you think that? And then the final question, which is most important, is what are you doing in preparation for what you believe the market is going to do? Because that's going to be the true indicator. And so I'll start off just so that way it kind of gives you a little bit more time to think about it. And then if you're willing to share, jump in right away. If you're not, then, we might ask you, because today was meant to really learn from everybody. As you know, up in here right now, Corey and I are in 3 markets. We're in Honolulu, we're in Seattle, and then we're also in Las Vegas. We really feel very excited about the market that lies ahead. We would probably be, to be honest, a little bit bearish to bullish, so we're going to transition to bullish pretty quickly because obviously real estate is one of those asset items right now, stronger than securities or stocks. And so we're pretty excited about it. We're really looking at acquiring some additional properties. Maybe we'll pick up the hotel in Waikiki. But overall, we feel, based on watching certain economists, taking a look at what we see is happening in the market, that there's definitely going to be a drop in pricing. There's going to be appraisals that are going to lag a little bit. Foreclosure will take a while before we see those happening. But right now, what we're preparing to do is starting to get cash ready for what lies ahead. And so our strategy right now is just kind of stockpiling cash and then working with as many investors as we can to start creating more of a hui, or a syndication, if you will. So that way we can start taking a look together because we're stronger together. And so we just feel like we're excited about the market that lies ahead. And we're really getting ready to start purchasing as many single as well as multifamily properties. So that's kind of where we're at this point. What about anybody else want to jump in at this point and kind of share what you're thinking?
Well, I have a question for you, Keiko.
Yeah. What's up, Craig?
What's the best strategy for finding off-market properties?
Good question. Can we, I'm going to write that down and I'm going to save it to the end. We're going to do a Q&A kind of at the end. Is that cool? But that's awesome. Great question. So Q&A, what's the best way to find off-market properties? Great. Craig, while you're talking, what do you feel about the market? Do you feel like it's going to go up, go down? How are you feeling?
Well, I think it's going to go down initially, but eventually, it's going to come back. I mean, people will always need housing, so it's just a matter of time before it comes back.
Gotcha.
So, I mean, I definitely want to take an opportunity to invest in as much as I can, right now, and just kind of wait.
Gotcha. Awesome. Right on. Thanks, Craig. That's fantastic.
Hey, cool. Quick question too, if I can jump in real fast.
Yeah. What's up, Ty?
What's the what do you kind of project like timeline wise? Like when I like almost exactly what you were saying was what I'm thinking as well. I'm probably on a way smaller scale. I'm just trying to stack up on cash, waiting. I've been throwing like around maybe like end of year to when we'll really start seeing the effects here in Hawaii specifically. What's kind of your timeline that you're seeing? And then 2, what's your thought on the short-term rentals? Because I think they're going to get smacked the hardest. And I think that's going to be kind of the most, like the biggest opportunity, if you will. What are your thoughts on those 2 pieces?
Yeah, that's actually a really, really good question. I'm going to answer that in just a second. I'm just curious if anybody else wants to tackle those 2, because those are really good questions and definitely has to do with the question that we're talking about here.
I can hop in, Keikoa.
Yeah.
Yeah, so obviously a lot of uncertainty right now with everything. And my initial thought on the question is that, the market will most likely take a significant plunge, have a continual downward ripple effect to some extent, and then slowly and continually rise, because I have faith in the economy, the American economy. It has to rise, because if it doesn't, we all have bigger problems than that. But honestly, it has not affected my plans whatsoever. And in the end, I don't think it even really matters what's going on. I think it all really comes down to your mindset and kind of how you view it. Are you reacting to all the stuff the pandemic's throwing at you, or are you being proactive during the pandemic? And if you are, that means you can probably be proactive during the next one. And hopefully that never happens, but just stuff like that. I love the quote that you cannot adjust the winds, but you can adjust your sails. And, right now the winds are going crazy. I think it mainly comes down to just what you believe and, how you take those beliefs and then create action in your life. A lot of it has to do with what you consume. If you hear news all day saying it's going to be awful, you'll probably believe that. If you hear more uplifting, optimistic stuff, you'll probably believe that. So what I'm doing is actually just staying on course. I'm not accelerating my plans necessarily, but my initial plans was actually this week, which I guess it got delayed like a week or so, was to move out to a new market, change my career. I'm not right now, I'm an investor, but I'm not in real estate full time, and I'm actually going to be going out and doing that full time. You know, I'm filling a hole in a particular market, and I don't see that changing, you know, at any time soon. So, you know, I think in the long run, this will be something long remembered. But for myself personally, I just see a lot of opportunity. You know, if you're somebody that's waiting to be like, okay, I'm waiting for the recession to hop in, it's like, okay, well, now's the time to act. But obviously, be aware of what's going on outside. You know, don't be silly with it. You know, define what it is that you want. Stay on the course that you were on, and just start figuring out the best way you can take advantage of this situation. And I really love the quote, you know, what are people's needs right now, and how can I best provide solutions of value to address those needs? So
That's awesome. That's cool. No, that's great. That definitely helped answer some of Tyler's questions as well. But yeah, thanks for that. And good luck as you move to Missouri. That's going to be an interesting market out there. And I mean, you're taking action right now, which is super important. And you're positioning yourselves in a market where the economy is strong, but at the same time, the pricing is highly, highly attractive. So it's going to be interesting.
I will say this, I did hesitate when this thing popped off in March. I was like, oh, I'm not doing it. You know, I'm going to wait for everything to, you know, chill out and fizzle out. But I started to realize if I wait, I'll just always be waiting. And there's no time like the present to just hop in. Of course, being smart about it and kind of measuring the risk. But yeah, so appreciate that.
Cool. Corey, what do you think about Tyler's question about timing and kind of taking a look at what might lie ahead? Do you have any thoughts on that?
Well, I agree with Tyler and Alex. Is like I'm short-term bearish, long-term bullish. I'm optimistic about the future. The near future, I'm a little concerned. So I think it's hard to tell on the timing, but I think within like 8 to 12 months from when we start to know for sure we're in a recession, I think 8 to 12 months, we might start to see it turn and you know, start to go stabilize and go back up. Because I don't think we're gonna sit for a couple of years or a few years like the last recession, since the last recession was directly related to, you know, the housing market. So whereas now it's multiple industries kind of collapsing at the same time. So I think the housing market I think we'll take a hit in the short term, but I think we'll bounce back quick. The question really is like how long and how far of a hit, like how deep of a hit are we going to take? That's in my opinion. And I think it's important to know though, I think it's going to be market specific. Like in Hawaii, we rely heavily on tourism, and right now there is no tourism going on. So there's a lot of jobs that are on the line right now. And even though I think last time I checked, it was over 34% unemployment in the state of Hawaii. So, and that's, I think, you know, we're still scratching the surface right now. So, and a lot of those jobs will probably come back, but how much will really depend, you know, how bad Hawaii gets hit.
Yeah, that's good. Tyler, my response to that is that I think the timing is now, actually. I think it begins now, and I think it's going to continue to be something that we just assess as we move forward. It's a little bit like, you know, when you go hiking, you kind of adjust as you climb the mountain, and you kind of decide you go this way or that way based on the terrain, the conditions, how you're feeling. Same thing, we've got kind of a hike ahead of us, and I think it starts right now. It starts to prepare right now. What are we taking on that hike? How are we looking at the journey that lies ahead? And are we preparing for a short hike or a long-term hike? I think we're preparing for a longer term hike because, and we need to stock up for that a little bit longer, which means making sure we have plenty of cash on hand. That's for our personal family lives, you know, I mean, things could get kind of tough for a bit. And so a lot of companies are unemployed or unemploying people. So kind of taking a look long-term that way. But then the other piece of it right now, the opportunity is really now in the multifamily space. So we are, as many of you know, we own a property management company as well. And we're now starting to see a lot of the owners having some concern over the whole rent situation from the tenants. And so the longer that this whole rent moratorium, eviction moratorium happens and rent strikes happen, there's actually going to be a lot of homeowners, landlords who are going to be in a situation where they're not going to be able to pay their mortgage. So they're looking at trying to unload those assets quickly. For whatever reason, government is really concerned about the tenants, and they forget that the owners actually have a mortgage to pay. And so what's going to be a really, really exciting opportunity is really target marketing a lot of those multifamily owners and seeing what you can do, we can do. I like what Alex said is like, hey, what can we do to help others? Part of it is just helping them, right? The other piece of it is really leveraging that for what season that lies ahead. So yeah, that's kind of my take. Did that kind of help answer that, Tyler? That's good?
Yeah, I like it.
I think
makes tons of sense.
Yeah. What about you? What are you doing in light of the economy relative to real estate in terms of preparing? And maybe you haven't thought that through fully, but kind of what are you thinking there?
I don't know who mentioned it earlier. It's like, it's tough, and I don't want to be as excited as I probably am because it's really hard for a lot of people right now. But I'm working like a dog right now to stack up on cash. I'm waiting. I'm just trying to see how much cash I can put on hand. And then I'm going to dump into, I think I like the short terms right now. It really just depends here on Maui, kind of what the best opportunities are. I think multifamily homes, kind of like what I'm in, they call it over here, like the Filipino setup, like where you have a main house, but then there's like 4 units within it. I love those over here on Maui. I also love though the Airbnbs because they're going to get hit hard. There's a lot of people that kind of, I think, overextended themselves, and they're going to have to make a move on those. And I think that was most everybody over here that was doing Airbnbs.
Yeah, absolutely.
So that's kind of what I'm looking at.
Nice. Fantastic. Awesome. Good stuff. Thanks, Tyler, for sharing, and feel free to jump in again if you hear anything that you've got questions about. That's awesome. Anybody else got any perspective on those questions?
Hey, Tyler, I have a Airbnb for sale on Big Island. If you want to take a look, I can send it to you. But we can do that later. But I also want to give my opinion a little bit too. I kind of echo what a lot of the other people said earlier, short-term bearish, long-term bullish. And the time frame is really going to be on a sub-market basis. It's going to depend, again, how well diversified the market is in terms of employment, because we're seeing here in Hawaii, we're very heavily dependent on tourism. So like retail is really taking a big hit. I just talked to my friend who works at Brookfield Properties. For those of you who don't know who Brookfield is, they own a lot of the really, really big shopping centers in the U.S. And they own Ala Moana Shopping Center, which is the biggest one we have here on Oahu. And she said that she couldn't give me the exact number, but she said between 20 and 30% of their tenants paid rent last month. So that's very small compared to like industrial. We saw 86% paid rent. So, and that's portfolio wide as well as Ala Moana. So we're opening up here in Hawaii today, Ala Moana, and there's only 33% of the tenants that are able to open up today. A lot of them are either not opening up because of financial reasons, because they would be losing money without having that tourist basis, or they weren't able to hire employees back fast enough given the short notice here from Governor Ige.
Yeah, interesting. I think that's going to be a trend that we're going to see across the country here with a lot of the states that are opening up is, not only can the businesses not fully staff, but at the same time, it's like, hey, a lot of people don't even want to go out to the stores or to the restaurants. They're still, they're worried that there's no vaccine and there's no real solution to that. So cool. Thanks, Lauren, for sharing that. That's awesome. Appreciate that.
If I may, there's a couple of things that came to light. We're part of a commercial group as well. And the commercial side has really taken a hit. And that bounces back onto the banks. That means to say that the banks are going to hold an awful lot of bad debt. They're going to look to offset. Now, 6 months to a year's time, if you're looking to move into commercial, that'd be great. But if you're still in the residential side, as we are, they are still looking to offload bad debt by lending on good debt. That's why the rates are coming down. So if you approach your banks now and your credit unions now, they are eager to lend money if they can actually get their act in gear. Now, we are quite bullish in the main because this isn't a systemic problem like 2008. This is a case where the whole world is just holding its breath, eager to get back to work again. The offices are there, the insurance companies are there, the airlines and the hotels are still there. They're just waiting to be allowed to start business again. On the Big Island, we're going to get hit really hard, 37% unemployment on the Big Island. But as soon as that comes back again, it means everyone will have the chance over a drip-free system, say to 6 months to a year, to get back to where they were. And on another scale, I'm not particularly bothered that some people may look to alternative industries than airlines and tourism because we are too heavily dependent on it. We could look at other industries, for example, the green, the geothermal, just the processes, or similar to Ireland, where they actually lower the tax and it becomes an IT center. We would love that here. Or maintaining things in the cross section, like electricians, plumbers, this kind of thing. We're desperately short of here. So we are really, really bullish in that respect, so long as we're prudent at it. And I think the idea is to, yes, keep the cash that you have, get access to as much cash as you have. Don't be ridiculous, but there are opportunities all over the place, in the commercial side, in the private sector, in the housing sector, so long as we're not ridiculous about it. I think, honestly, Corey, if you're selling big units in the short term, they may be difficult to sell them. But we are, for example, looking at affordable housing, and there's always a market for affordable housing, and even now. And so Hawaii isn't the same as the mainland. We are more internationally diverse here, the economy. We get people from Taiwan, China, Australia, Canada, purchasing specifically here because the property prices are so low, property taxes are so low. So I think Hawaii is still a very, very strong area. Honolulu would take a hit, but other areas, I think it's really, really strong.
That's great. No, that's fantastic. Thank you for sharing that. Awesome. Cool stuff. Yeah.
I thought, so I mean, I know everybody here is kind of like, for the most part, you're a little bearish about the immediate downturn, but you think it's going to turn around. And so I hear a lot of people saying they're stacking cash, but then are you guys stacking cash like in your bank account, just sitting in your checking? Because if you're just doing deals anyway, doesn't that cash recycle itself anyway? So like if you're doing a flip or short-term burrs, it's better to keep on doing deals and let your cash be ready for making money while you're waiting for the next deal versus just letting it sit in the sidelines, you know? I mean, just kind of get your guys' thoughts on as far as like, when you say stacking cash, it pretty much, does that just mean like your shorter term deals that you want to invest in, or does that mean like you just want to put it in a CD or like a high return savings or something, you know?
I think what they mean is stacking cash now to jump on opportunities, because I don't think anyone here, I don't think any of us want to actually just hold cash in the bank. You know what I mean? Especially when they're dumping trillions of dollars of fiat currency into the economy. Like, that money is being devalued by the second. So I don't think we should hold cash. I think we should, stack cash to buy assets, but buy assets obviously at the right price in these times, right? So I'm pretty sure that.
So basically, business as usual, right? I mean, when you say stack cash, is it you're still recycling all your money? It's not like you're holding on the sidelines for anything, yeah?
I don't think it's business as usual, but in the sense of, are we still looking to deploy capital, like your cash? Absolutely, right? Maybe if you feel we're not, bottoming out yet or anything like that, then you might want to sit on the sidelines for a little while and then come in. Then yeah, that's how I
Please clean up the couch nicely. Oh, sorry, I have a comment too on this cash flow thing. And so I've been kind of pooling all my cash to, build the next level of my home, to get it rented and get cash flow, right? I spoke to my financial advisor earlier this week, and she was like, don't over leverage, hold your cash. Cash is king, get it together. And I said, well, where else can I invest? Because if I looked at the end of 2019, anything that was vested from 401k to Roth or whatever was really strong. And then now I've looked at the end of Q1 and I took a major hit, right? Down tens of thousands. And so looking to pull some of that right now is penalty free. If you've been affected by COVID, you can draw on your 401k or some other avenues without paying that 10% penalty. And obviously if some of it was put in pre-tax, you won't be paying that either in the aftermath. But she was advising me still just to hold. She's like, wait before you spend that money another 90 days. And I'm like, you know, frothing at the mouth, wanting to put it in opportunities. Like you said, there's this downturn. And what I noticed at the end of Q1, it was really, really low. And then now it's come back up a little bit. And, you know, she's even telling me that if you didn't max out your contributions for 2019, that you can still do that until July. And so I'm kind of like sitting going, okay, what should I do? Pull all my cash together and like sit and hold it? Or do we move with it? Do we build and invest? And so I'm kind of at that crossroads as well. So, you know, you don't want to just sitting in the bank doing nothing. You want it at least growing or penetrating some market. You know, I believe the real estate market's really strong. My broker called me yesterday and he's like, are you ready? He's like, I'm getting leads out of the left field right now because interest rates are so good.
Yeah.
Right.
It's totally
I think
true.
it's just important not to fall into a trap, because right now the numbers are showing strong, but again, we're lagging, right? So like the numbers don't come out till we look at valuations and statistics based on what last month did, what last quarter did, and so it's yet to be seen. And right now inventory is low because people aren't putting their houses on market. So that could be the reason why prices are, there's still, there's multiple offers, and just be careful with that. And foreclosures, they're not processing foreclosures, so that's a big chunk of the inventory that's not coming to market as well. So just keep that in mind, that even though your realtor or somebody's saying that, the statistics they're lagging right now, right? It's a lagging indicator.
Yeah, that's good. Hey, let's call on, I'm going to call on Troy, because he was talking. Troy is an executive at Disney, and so he's watching the economy from kind of a Disney World perspective. But Troy's also an avid real estate investor. I've gotten to know him pretty well. Troy, what's kind of your take on what the market's going to do? You have an interesting perspective because you're looking at it from an entertainment side, but then also you have this real estate hat that you wear. How are you feeling kind of overall relative to bearish or bullish, and what are you folks doing to kind of prepare for what lies ahead?
Yeah. Thanks. No, I mean, just speaking from putting my Disney hat on for a second, and obviously I'm not going to say anything that's confidential, but the company definitely feels bearish overall about kind of the longevity of the company, where we're headed, kind of the assets that we have, the value that entertainment brings to people, across the entire Disney portfolio. So I think there's no question that, people across the company are very bullish on the economy overall. I think that, kind of what we've seen recently in the U.S., particularly in Washington State, I just saw some statistics today, like states seem to be getting, COVID-19 under control. So that's a really good sign. It could be headed in another direction. So I think that gives, people hope. You also see, and I don't know who said this earlier, but you're definitely seeing, just in local economy, people are anxious to kind of get back going again, right? Grocery sales are up at, in double or triple digits, right? Since like 1970s, I think they haven't seen growth that high. So there's definitely indicators, at least from my perspective, that show that the economic growth is there. My wife and I, Maria, she kind of manages our real estate portfolio, and we're I think along with all of you, bearish short-term, bullish long-term. We're feeling a little bit anxious because we're like, oh my gosh, maybe all the opportunities aren't there today, but we think that they will be in the next couple of months. And I think you all have kind of echoed the same sentiment. So, we're in kind of this unique position where, we do have some cash on hand and we're trying to kind of accumulate more. So the next couple of months we're ready to act on something. I think just speaking for us really specifically, granted, some of our properties are in A-class neighborhoods here in the Seattle area. And the demand for those rentals was crazy. Really, in the midst of COVID-19, people wearing masks. We had, 10 people within a couple of days that were competing essentially to try and get one of our rentals in the Seattle area. So I don't know, things feel good. And I think, Kakoa, you said this, and I've heard Corey and others say it too, that, unlike, 2008, this is a health crisis. This is not a housing crisis. And I read a great article that's kind of summarized a bunch of the housing market on Medium a couple days ago that talked about, which is different from 2007, that today we have better regulations, right, to ensure that the subprime mortgage fraud isn't there. Borrower credentials are likely or obviously being checked more vigorously than before. So there's probably more checks and balances today than there were before, and I think that probably bodes well for all of us. So
that's great. So you're so you and your wife, you said you're stocking some cash. So kind of answering the question from earlier, you're not necessarily just kind of sitting around with cash. Your cash is sitting active, if there's such a term, right? So you're kind of looking ahead. So what are you specifically looking for? I know you alluded to you've got some rentals that are pretty high demand. Are you looking more for multifamilies in the season ahead? And why are you looking for what you're looking for?
Yeah, I mean, we've always been, initially we were targeting kind of single family and small multifamily to duplex, triplex. We ended up getting a fourplex. We'd like to go bigger just to try and scale the business more quickly. And so, we'd like to get, 10 to 15 units is what we're looking at next. So kind of commercial and really start to kind of grow the business in that direction. It just feels like, I mean, this is obvious, but right, the overhead associated with managing 3 single family rentals along with all the paperwork and everything else is triple what it is for a triplex, right? So I think there's some value in trying to create scale that way. So that's kind of what we're thinking. So, in the next couple of months and also I think just diversification. I mean, we have single family, we have the, small multifamily, and I think commercial is really the next place where we like to head.
That's awesome. Fantastic. Well, we've got some off markets in Seattle that are 10 units or bigger. So let us know.
Yeah, thanks.
Corey, is Dante on the line? I think Dante probably has some good stuff to share.
Now I want to hear from Dante. He had some, he in the Facebook group. Hopefully you guys all make your way to the Facebook group, because I'd like to start some, carry on the conversation there. It's Justin started the page. It's called Keiko Exchange. But yeah, Dante, can you I want to hear your insight on what you're seeing. Dante's a licensed broker out here in Hawaii.
Okay. What I see right now is it's like, I only can see what's going on. Like they say, like you can't predict the future, but you can figure out where you are in the market. So what I see right now is we're at the complacency stage. So meaning everyone's, perspective is different. So like I've been going through meetings. So some of the information I never list down was I've been in conference calls with Paul Brubaker, which is a local economist here in Hawaii. And their perspective, like a whole bunch of realtors' perspective as well, is the market in Hawaii is different. So it's basically, we're at a level off stage. But Kauai, surprisingly, is booming because all the millionaires are purchasing Kauai. They want to separate them.
Apparently Dante went.
He's frozen. Okay, so hopefully Dante gets reception back. But another person I wanted to ask was Ashley Wasson, because she had a good input about her thoughts on kind of what Troy said about how after subprime we put a lot more strict regulations, right, on the lending side, so which now has kind of lowered the amount of foreclosures and short sales. So I think, and then Ashley had a good point on the equity side. You want to talk about that?
Well, yeah, sure. Just real brief. I think it's just good to remember that, with this crisis, it's just a little different because today there's more people that have equity in their homes than they had in past housing crises or recessions. You have over 60% of homeowners today that have about 60% in equity nationwide in their houses. So if the prices dip, they're not in such a pinch to have to sell or go through the foreclosure process. So if they do lose their job, sadly, and they absolutely have to sell, there's cushion there, a lot more than there was before. Also, there's about 37% Americans that don't have a mortgage anymore also. So again, it's an unfortunate scenario if anyone's forced to sell due to this, but it's not going to create the same type of crash that it did, say, in 2008.
Yeah, I can't imagine if they were cutting dirty loans like they were in 2008, and then this happens, that would be like catastrophic, right?
Well, yeah, before too, you have to think like getting a loan was really easy. You didn't need to have the same job security, same credit score. It's so much harder to get a loan now than it was then. There's just a lot of things that have sort of created this shelter. So in the event that this did happen, I mean, we are going to see some type of aftershock, but it's not set up to be the same type of catastrophic housing event that it was before. But I think that's going to change market to market. And obviously, if you're a tourist market, if you have any major facilities around you, I think that's, in Hawaii, we're really lucky because we have 7 military bases within 50 miles of each other. So that really helps stabilize our market. And I'm sure other states that have that will also see sort of the same stability as well. So I feel for those who are going through hardships, but I feel like it's promising still.
Ashley, can I ask you a question? So just regards to that equity statement, a lot of people are sitting on a boatload of equity. Now, if they're unemployed, and then another gentleman made a comment earlier about, lending, like the credit unions are going to want to start, lending. But if people are unemployed, do you think that it's going to be a challenge for them to get an equity line of credit?
Well, yeah, naturally. We're just talking about them being forced into foreclosure or being forced into a short sale. There's definitely going to be still struggling people that need to sell and need to switch gears and rent. And getting an equity line of credit, they're going to have to leverage other people to help co-sign and such to carry them through these times. And again, if those people are getting unemployed, is that temporary unemployment? Because these unemployment numbers, those are a lot of temporary. Like my mom's furloughed 1 week out of 4, and she's still a statistic on unemployment, but she's really still working 3 weeks out of the month. So what are those numbers going to look like in a few months? And again, this is just going to shift opportunity. So people are going to be set back, but they're going to get back to work because other people are going to find new opportunities, new businesses, new factories, whatever that might be. People are thinking, they're shifting, they're moving. So is it in the same field as what they did before? And if so, are they going to be able to transition right into a mortgage again? Did they consistently make their payments or pay their taxes in the meantime? Can they show a history that's positive to the lender that gives them confidence in reborrowing? Case by case.
That's awesome. That's super insightful, and that's super useful. Awesome. Hey, it's a little bit after 2. Let me just switch gears a little bit. I know a bunch of us didn't get a chance to share, but that's what the Facebook page is going to be about. So Keiko Exchange, jump on that this week. We can have some conversations going. Got a couple things left I wanted to do, not go too long. Alex has been kind of watching the market relative to the financial side. We've had a lot of people just say, hey, that's real helpful. So I was going to have Alex just share a little bit about the lending piece right now, what we're seeing out there in terms of rates and what it's looking like for the future of hard money, conventional money, and commercial space money. So Alex, you want to jump into that?
I would love to. Hey guys, thank you for joining us today. Truly appreciate all of your input and seeing all your faces and, getting some good news and some smiles out of everybody. Love the optimism between all of us. Just real quick for me, I feel that the market is going to take another dip, but I am very bullish on getting in the market right now in the real estate market, not into the market, but get into the real estate market, make some moves and find some solid returns. I do have a deal right now. I'm looking for $300K, 12% return to the investor plus a 2% upfront, just to throw that out there. But guys, 30 years coming back into the market for, I like to call it kind of soft money. You're looking at starting rates around 7 to 8%. We're looking at on a purchase for 740 plus credit, 65% of purchase. And we're looking at about 65% of the ARV as well, if there is to be any rehab done to that property. For rate and term, you're going to be at 65%. Cash out would be 60%, and that's all for 740 plus on credit. If you're between 680, 739, we're looking at about a 60% of purchase and 65% of ARV, and then rate and term 60, cash out 55%. Foreign nationals all take a 5% hit on purchases, and rate and term or cash out, they take a 10% hit. But that's awesome that that program is back in and it's available. So if you need something like that, we would love to give you a quote and work with you on that. Also, guys, we have a line for new customers. So first-time investors back in the game, we can work with them. They are, you know, a little bit lower leverages. Anything under a 700 FICO is taking a 5% hit on leverages. We're looking at about 65% of the ARV, up to 80% loan to cost. For a first-time investor, that's a 5% hit. So max is going to be 75 on LTC. And that's if they're over 700. But there is opportunity for new investors to get back in and us to give you some quotes. But we're looking at 80% of loan to cost for a seasoned investor with 100% of rehab, which is great. Our rates, you know, we're looking anywhere from, you know, 9 to 11, I would say is where it's going to fall. We're trying to be aggressive as we possibly can to make sure that our clients get the best absolute offer possible. We do also have, you know, some soft money that is available. It's a longer close. We're looking at 60 to 70 day close, but you're looking at, you know, 4.5 to 5.5% on 30-year notes. So there's a lot of capital coming back into the market. There's a lot of opportunity right now to, you know, really use COVID as a, you know, a card to get you a better deal, better discount. You know, you got to say that, hey, I'm being very optimistic. I need an extra 5% cushion in this deal. So use it to your advantage. I know it's hard for a lot of people and it's not good. And I feel for everyone that's struggling through this time, but that doesn't mean that we can't go out and we can't help them in a fashionable way by helping them get a deal done, helping them either get the equity out of the property, save the property, whatever it's about. Look, we just need to be there to help and not get so stuck on, oh man, like this is a bad situation for them. Let's make it a better situation from them and no longer just a bad situation. So guys, if you have any questions on, you know, potential loan or a rate, you know, you want us to quote or look at the deal and tell you what we think of it, we would love to help you. And Tyler and Justin and Scott and myself are always available. Corey and Kakoa too, I know they are. They have a lot going on. So if you can't get a hold of them, I put my number in the chat box and my email. I'm always available. If I don't answer, I'm probably on a call. I'll text you and we can plan on getting on a call as soon as possible. Grateful for your time. Everybody have an amazing day.
Thanks, Alex. That was fantastic. Yeah, so if you ever want to reach out to Alex, he's out of our San Diego office, always right on top of all the details relative to the industries for loans. So if you have something that you're looking to try to finance, give us a call. It doesn't have to be hard money. It could be soft money, easy money, could be commercial money. So lots of different opportunities, which would be awesome. Don't want to leave without answering that question that Craig had posed earlier. And then we'll do some Q&A here. Craig asked the question, how do you source off-market deals? I'm going to toss it over to our off-market team. So Tomas and Jorge run our wholesale line and all of our direct marketing. So Tomas, do you think in about 120 seconds, you can kind of give a couple of cool tools that we use? I know you're Colombian and you like to talk, but at the same time, go for it.
Yeah, totally. So I guess for our off-market acquisitions, if I was just to rattle them off really quickly, it would be PropStream to pull off the public records. Another good one is ListSource, but we're currently using PropStream, and you can pull public records anywhere throughout the country. After we have those public records, we take it to batchskiptracing.com, and that's where we're going to be able to skip trace all those leads to be able to get the phone numbers. And then after you skip trace them, then you're really looking at what marketing style that you want to do. We really like doing cold calling and SMS blast. So we're using batchleads.io for the SMS blasting. And yeah, after that, I mean, for like a CRM, you could use Follow Up Boss. That's what we use, but we've heard really good things about like Podio too, which is another CRM. So, I mean, that's just our bread and butter right now for what we're doing with our off-market acquisitions.
I just want to say thank you, Tomas, for I think it was like our second meeting. You kind of went over, what you guys are doing and stuff. So obviously, since I'm dangerous with information, we implemented it here. I think you were in touch with Jessica, right?
Yep,
So
yeah.
we put in those, and dude, our response rate was amazing. On the
Bonk, right?
SMS. Yeah, we're crushing it. So thank you very much.
Totally. Yeah. So we really like SMS just because, like Corey said, the response rate that you get on it is just absolutely insane. And for the cost that you're getting those leads at, which is literally, $1.50, it's definitely a good bang for your buck. And it really allows you to be flexible with how you're responding to them, when you're responding to them. And yeah, it's just a really great form of marketing that we're seeing.
Nice. And just to follow up, because the last meeting I kind of gave you guys a kind of on the gets and gots is that a heads up about we're going to be targeting short-term vacation rental owners in specific buildings. And so we used what Tomas, his strategy and what they're doing up there with our team in Seattle. And we did that down here, had a great response rate. The only thing is, I think we're too early. And James, who was on the call too, we're working this campaign together. And so we realize they are distressed, but we're too early in a sense of the sticker shock on the pricing, right? So we can clearly see in the building that over the years that we're at the highest, they're selling for the highest that it ever has right now. And there's not one comp that has, actually there's one comp that was the first COVID comp that you can see a clear drop in the value. So we're a little too early on that campaign. So just wanted to update you guys. Yeah. But I think in the near future, when we go back for a second round, we're going to have some deals coming through the pipeline, but we're a little too early right now in the market.
That's awesome. Tomas, there's some questions about just kind of how to learn more about SMS lead gen. So can you throw your info down there on the chat, and anybody who's interested in that SMS, it's not that we have the perfect way to do it, but there's definitely some really cool opportunities with SMS, and we're getting some really good leads. I think we just did a blast recently, and I think we've got 15 that actually are real leads that we're working on off market right now. So definitely some good opportunities in this time. And as somebody put it really well, it's the fact that right now everybody's home and everybody's on their phones checking Instagram and social media all day long. So a text that comes in is pretty sweet. So that's awesome. Any other questions? And then we'll start to kind of wrap it down here for anything else.
I kind of have a question
in
relation to what Corey was talking about. So we were planning on doing a campaign with like mailers followed up with SMSs and cold calls. Corey, when you mentioned that right now it was a little too early, did you mean low offers are a little too early because people are not quite feeling the what's coming, or did you mean that perhaps wait a month or 2 months prior to like within your touches, the mailers, and then wait so long to you want to stay on top of them, but you don't want to scare them off either? So if you could, I don't know.
Yeah, sure. So I know we're running over. So if you guys got to check out, then, by all means, but I'm going to, let me share my screen real quick to show you what I was looking at. So this is in the Hawaiian Monarch. Okay. This is, can you guys see the screen? These are comparable sales for the history, or, for the history of sales in that building from 1999. So you can clearly see the prices, right? 60,000. These are for studios. 60,000, right? And then 2003, it's going up. 78, 2004. Now this is where we're hitting the peak of the market, right? 2005, 2006, 2007. So now we're in the 130s, and then comes the crash, right? 2008. We're going back down. So we peaked at 177 here. So whoever bought this one, kind of bought at the top in 2006, and then now we're going down, right? Now we're below 100. So, And then we start to bounce back. 2011, 2012. Now we're on the upswing. And then 2014, 15, now we're on the bull run, right? This is the bull run that we've been on for over a decade. So now we're in the 200s, and we've been riding this bull for, 10 years or so, over more. Now we're 2019. Okay, so here's COVID, right? Right before COVID, 235 at the peak, right? 235, 245. This is like the first COVID comp here, listed at 220, sold for 205. So when I say we're too early, I mean that there's not even comps yet showing a clear decline, but this comp right here is enough for me to know that we are heading down, especially in that building and in the short-term vacation rental space, but we're too early, because the homeowners they're still stuck at my house. My unit is worth $245,000, right? It's going to take some time for people to, and when I say time, it might be only a couple months of bleeding. And then, so that's what I mean. That's just what I meant.
Perfect. Thank you.
Yeah, that makes sense.
Yeah.
That's awesome. That was a great question. Hey, I know we're at 2:20, so just kind of wrap up a couple things. Let's see. So check out the Facebook page if you get a chance this week. That's super awesome. Oh, this is Jeremiah, by the way. Say hi, Jeremiah. He just turned 18. At least he acts like he turned 18. How old are you now? He's 12 years old. We just got our own haircuts. We haircut ourselves here at home. It's called the COVID Cuts. It's going to be this new brand that we're going to start called COVID Cuts. But I asked Jeremiah to stop in here because one of the things that we're going to do is, how many of you have read this book? It's called Rich Dad, Poor Dad. Some of you have read it. Some of you haven't read it. It's a life-changing book. It's awesome. I think I've read it probably 5 times. And every time I reread it, it gives me some new insight of some sort. So we're gonna read this again. Actually, the reason I brought it up is Jeremiah and I are reading it, and so it's kind of fun. Did you like the book?
I liked it, yeah.
So I'm putting him on the spot. Tell us one thing that you learned.
To buy assets, not liabilities.
And what are assets?
Assets are things that make you money, and liabilities are things that take away your money.
It's pretty good for a 12-year-old, wouldn't you say?
Awesome.
That's perfect, because now I don't have to buy him toys and I have to buy him TVs, because those are liabilities, right? So it's perfect. But it's been actually pretty cool. I told Jeremiah I'd love to have him buy his first rental property sometime before he turns 18 years old. So it's been kind of cool. So we've been reading through this book, and I wanted to throw that out to everybody. If you want to read it again, I want to just invite you to jump in with us. We're going to start this next week. So not this week, but next Monday, we'll read chapter 1. So every week, it's like a book club, if you will, but a bunch of us haven't read it. Some of us have read it, and it may be a good refresher. We were reading it at night during this COVID thing because, we got time. So it's kind of cool. So just read a chapter, and then just anytime you read, just throw your thoughts, and I'll do the same. And then we'll just talk together about what we're learning. And then I think what's going to be cool is that it's going to create some opportunities for us to actually think about how we can network more together, do some things together, because this book is game changer. If you ask probably 100 investors, probably 99 of them would say this is the book that really created their mindset. And so again, I read this a long time ago, reread it a couple times, and so it's been super fun. And then even your 12-year-old enjoys it, which is kind of crazy, but it's kind of fun. So anyhow, yeah, that's cool. Do you want to stick around? You can.
The book changed my life.
Yeah, it's a great book, and he's doing good. So he actually started an eBay business, which is really funny as a result. So he's trying to buy assets, and so in the middle of the pandemic,
you gotta be careful. He might want to quit school, like I almost did when I read that book.
No, he's already decided he's not going to college. He's buying real estate and have passive income. So I figure, hey, we're gonna have a real estate guru by 18 years old, and that'll be fun. I'm totally cool with that. So anyways, again, chapter 1 next week. We'll throw this on the Facebook on our Keiko Exchange, and then we'll just dialogue, learn together. And that means, Corey, you got to read too, bro.
Okay.
Awesome. Right on. Hey, thanks again, everybody. This was awesome. Super fun to kind of hang out, super insightful. And again, Corey and I are here at your disposal. We love giving away things where we've got this abundant mindset that we're better together. Corey and I are really, as we shared, we're really hoping that everybody is successful. We're creating a couple opportunities that are pretty exciting for us in the future, where it'll give us a chance for, especially those of you who are newer to investing and have been asking, you know, how can I get started? We're going to create some opportunities where we can just hui together. What's that word? Team together, partner together, do some big deals as the market continues to drop. We'll continue to rise. So thanks for joining us. Corey, any final words?
Yeah, just one thing is like me, Kekoa, Scott, Alex, Layla, Justin, and Tyler, the whole team, and even in Seattle, Tomas, and like we have a few opportunities and partnerships that we're aligning. One of them I saw, you know, is on the call, and we have some big things coming down the pipeline. We can't really talk about it yet, but if you guys just stay tuned, you know, and you know, because together, you know, we're all gonna be able to thrive.
Awesome. Cool. So for those of you who want to exit, this is officially the end of this week. Thank you for joining us. This was super fun. Our wholesale guy, Tomas and Corey, are going to chat here just in this next little bit about some of the wholesale strategies that we're using here in Seattle to get some pretty good deals. If you're not familiar with what wholesale means, it's basically off-market, direct-to-seller opportunities. So if you want to stay on, you're welcome to. Otherwise, have a great week, everybody. Great to chat, and hopefully we'll catch you on our Keiko Exchange Facebook page this weekend. Pick up the book and let's read it together. Should be really fun. All right, Tomas and Corey, take it away if you guys are going to chat.
Okay, so Corey, I got questions for you.
Okay.
So really the only thing that I'm continually trying to figure out and, you know, really just wrap my head around is what lists you're polling right now. And I know it's going to be really dependent towards, you know, the market you're in. And I know when Jessica and I have been talking for the past couple of weeks that you guys are really targeting short-term rentals. I guess a little bit of context is, you know, I've been looking at obviously pre-foreclosures, probate leads, high equity absentee owners. But I've come to really realize that I think low equity owners are going to be some of the best to target, because in a way those are low hanging fruit, right? Because if you look at the traditional wholesaler, all that they're going to come into that wholesaling deal is with just buying it at a cash offer, which is usually just buying it really deep. But what if they don't have the equity to take that cash offer? So a lot of wholesalers, at least in the Seattle market, leave those leads and say, you know, I can't do anything with them.
Yeah.
So what I think it really comes down to is creative financing. So like subject to financing, or even doing like a wrap where you seller finance a little bit of the equity and then you do subject to financing for their mortgage. So that's what I think, you know, I'm really bullish on, quote unquote, I guess, is low equity owners and preferably absentee. But I'm just curious on the list that you're kind of pulling right now too.
That's a great question. And we probably should have talked about it. You know, maybe we'll bring it up on the next call. Because, well, for one, if you target that list and you pull, you know, ones that don't have much equity but have a heavy loan, you know, so they're probably more motivated. They may be more motivated, right, to get out. The only thing is you have to think of who's your buyer if you're wholesaling, right? Because if you're in an equity market like in Hawaii or in like downtown Seattle, then most of your buyers are probably going to be doing equity plays, right? So buy, fix, sell. So flipping houses. And in that scenario, that strategy targeting that list isn't, it's probably not the best bet, you know, because they need equity and they don't have equity. So if you're going after homeowners that don't have equity, then who's your buyers? Well, your buyers may be ones to BRRRR, you know, who they don't need as much equity in the deal because they're going to do a cash out refi and hold it. Or maybe your buyer that you're going to wholesale to is someone who's going to buy it subject to the mortgage, right? Subject to the existing mortgage and take over the debt, take title, and hold the property, right? So it really depends. If you're gonna do that, make sure you know your exit, like you know who you're gonna be wholesaling to. So that's a good point, because when I used to wholesale and kind of just try to target pulling lists and stuff, I was going after high equity absentee owners who had some sort of mortgage. So they had like maybe up to 70 to 75% equity, you know, so they had some sort of, I don't think you have to go all the way up where they don't have any equity. You know, the more debt that they're carrying, the more likely they will be motivated to talk about either selling, you know, to you and you wholesaling it. But to give a good balance, I would go after, and that strategy worked out really well. I would go after high equity, out-of-state absentee owners with they had high equity, so like 70%, right? But they still had the burden of a mortgage, right? They still had some sort of monthly payment that they're responsible for. So that's the list that worked well. For us right now, we're targeting short-term vacation rental homeowners because they're getting crushed, right? So I don't know if you guys saw in the Facebook group, but I posted that that video, the interview that the CEO of Redfin did, and I want to hear what he has to say, you know, because they have all the data, right? Like they can see people in large cities like Seattle, New York, actively searching for homes to buy outside the city. Like, you know, he said Seattle are looking to buy in Boise, right? So anyway, but he also mentioned the short-term vacation rental space because they are getting crushed, you know, and so that's why we targeted the Hawaiian Monarch, because it's a condotel, meaning that it's a hotel, but the units can be individually owned and operate as a short-term vacation rental. So the only problem is most of the units in there are studios and it's low price points. So it's hard to get, you know, a decent spread of equity, right? So, and we're a little early as we looked at the comps. We're too early right now. But I think in a couple months, depending on how things go, because we don't have, no one has a crystal ball in all of this, but it could change things. You know, the markets could go down, especially in that area. So to answer your question, I would target, you don't have to go to high equity or like highly leveraged homeowners. I would say as long as they still have the burden of the mortgage, you know, but still have enough equity, that's a more powerful list than 100% equity or you know, highly leveraged. Like keep it, because like they still have the burden of paying the monthly mortgage, right? Sure. Another strategy too that we're thinking about in the Hawaiian Monarch is during these times, it is time to get creative. So different plays like a lease option, you know, like structuring deals as a lease option. I would do that, you know, because maybe they can't sell it to us at a price where we have enough equity to wholesale it or to flip it ourselves. They want, you know, but they're still motivated and willing to sell. We can structure it as a lease option, right? So we can lease from them with the agreement for us to sublease as a vacation rental. Okay, so it's kind of, I don't know if you guys heard of Airbnb arbitrage, but I used to do that. I had a bunch of units here in Hawaii where we would lease and then sublease as vacation rental, right? So we might pay $2,000 a month in rent, but we might make like $5,500 subleasing. So we cash flow net maybe about $2,000 a month. So, and then you're not all in, you know, where you own the property, right? So there's pluses and minuses into this, but your expenses, your buy-in is low when you arbitrage. But so the secondary exit strategy for me and James and Jessica, who teamed up to target that building, was, well, first we look at equity. Can we just buy it or wholesale it, right? If not, if the homeowner needs more because they have debt or something, And then we would try to see if we can structure it as a lease option, you know, with an option to purchase, with the thought that we're short-term bearish, long-term bullish, right? So maybe we have the option to buy the unit in 3 years, but during the 3 years, we're arbitraging it as a short-term vacation rental. So we got to get creative during these times.
Yeah. I mean, you know, when I was doing the low equity, because the feedback that I was getting whenever I was doing these high equity absentee SMS blasts is a lot of the leads that would come back in, they're like, yeah, you know, I have this home free and clear, or, you know, I have this fourplex free and clear, whatever property it may be. And they didn't really need to sell.
Mm-hmm.
And since they had it free and clear, what they were saying is basically like, hey, you know, it's like, yes, I understand we're in the midst of COVID. I would like to sell, but I don't need to sell right now.
Mm-hmm.
So there wasn't really that much motivation behind it. And I think where I really became a little bit romantic towards like subject to deals was because I feel like those people, you know, especially, I mean, I heard this too originally from somebody else, but they were really bullish on targeting the people that were at the county loan limit rates per count, whatever county you're in, and targeting those people because theoretically they stretch to get into their loan, and they're going to be low equity, meaning that a wholesaler, if they came in only trying to buy it deep, they can't buy it deep. So then it's a low hanging fruit because they still have that motivation because they need to sell right now. And the reason that I think, you know, buying it on subject to would be perfect would be because if you dispo it out to an end buyer and you say, hey, I have this buy and hold right now with financing already in place, and you just need to pay me the assignment fee pretty much, and that's perfect. And I think that for a lot of end buyers right now, given the constraints of lending and lenders just really tightening their belts, is going to be something that's really appealing. But yeah, I mean, that's kind of what I was curious to on.
Yeah,
you know, those kind of reasons.
absolutely. Like if that is the strategy, as long as you're aware that that's the exit strategy, is to find a buyer find buyers that want to hold it, right, for cash flow. So as long as that's the thinking, then yeah, I'd say go for it, and you might actually get a great response rate. Just make sure you have the buyer lined up in the back, and you know what type of NOI are they looking for, you know, what type of, you know, cash flow, right? What type of ROI and what cap rates are they looking at before you start, so that you know how to negotiate the deal.
Yeah, I mean, that's actually a really good point too, because Jorge and I, we were working on this deal with Keikoa for the past couple of weeks, and it's a 32 unit land development deal up in Marysville. So that's a city just north of Seattle.
Mm-hmm.
And, you know, we brought it to Keikoa first, and we're like, hey, you know, how should we dispo this deal out, right? Like, who should we bring it to? And I think the question that everybody started to ask was, all right, who's going to be this end buyer? Right. And it's going to have to be a developer, but are there any developers that are buying right now with everything going on?
You'd be surprised.
Exactly, right? So the first thing that we did was we just reached out to the Facebook Washington Real Estate Investment Group, which is where pretty much all real estate investors hang out on. And we said, hey, you know, we have this land development deal up in Marysville, and it's definitely one of those cities that's coming, you know, up and coming. And, you know, are there any developers that are still buying right now amidst COVID and everything that's going on? And we had like 20 people respond. So we're like, perfect. You know, these are potential end buyers.
Right.
So, you know, from a deal that Keikoa was like, hey, you know, I don't really want to do anything with it. I think I'm not the right buyer for you. Just by saying, no, I think there is the right buyer for this. We just need to find that buyer. Mm-hmm. Now we're looking at making, you know, $200,000 on an assignment fee because, and it is, yeah, well, it is also, you know, a 90-day feasibility and a 1 to 2 year close. So it's going to be one of those things where it takes a long time, but it's a very serious buyer. But it really, you know, the only delta or the only bridge that we needed to cross was basically finding that right buyer.
Right.
So I think for, you know, a lot of people out here right now, they're just trying to dispo their deals. There's another deal that we're working on too that has a really great spread on it. I mean, definitely a 6-figure spread, but it's going to cost, you know, $800,000 to get into, and then $400,000 to remodel it. And then on top of that, I mean, you're going to be making what, $250,000 based on the comps, but the comps, there aren't that many to support it. So we don't really know if there's an end buyer that's willing to take that gamble of being on the market for that long.
Right.
I think that those are some of the issues that we're running into right now, is really just trying to find that right end buyer. So I think for everybody, you know, listening right now, it really does come into play to make sure that you have an end buyer in mind, or at least you have a great strategy about going to find that person.
Yeah.
Because it would be terrible to lock up a deal, you know, have earnest money in and not be able to find a buyer after 30 days.
Yeah.
So I don't know, definitely food for thought. But I think I really want to segue into a little bit more of the nuts and bolts about your marketing strategies. So you're doing SMS right now.
Yeah.
I know you and Keiko were doing tons of mailers back in the day, and still were doing it for a while. So I think for everybody talking right now, you know, I really like SMS, but why have you really chosen to do SMS and not do like RVMs, not do mailers and cold calls and all the other great strategies?
Well, the reason mainly is time. Like, I just don't have to, I have to build teams in order to handle like the leads, you know? So I would say if I was strictly wholesaling and that's all I was focused on, and we didn't have multiple companies to look after, I would do it all, you know, and track everything. And, you know, I would start with direct mail because that's been tried and true for me. But the SMS blasts are actually, I'm shocked at the response rate with that, you know? So I would say that would be number one, you know, but also direct mail, and starting with like simple driving for dollar lists, you know, and like having maybe building teams around that to leverage other people's time to, you know, tell them like, hey, can you please like tell everyone, you know, if you see any, you know, rundown houses that look vacant or the grass is overgrown, can you just shoot me the address, you know? And so a few times I couldn't, there was like one of them on Hawaii Kai Drive, no, it's like Luna Lilo Road, which is like a really kind of prominent, well-known road in Oahu. And I was trying to find the owner for this house for the longest time. I would send mailers, I would skip trace, do calls, couldn't find them. So I mailed the neighbor, like both neighbors on both sides. And I told them, hey, I'm looking to buy the house, you know, your neighbor's house. I cannot get a hold of them. Can you please call me? And like, you know, you know, we can pay referral fees up to like 10,000, you know, and one of the neighbors called me back and he was like, he told me everything, you know, gave me their cell phone, everything. So didn't end up closing the deal, but they what happened was the neighbor, I told him, you know, we can pay, you know, referral fee. So, and, you know, then I'll keep it confidential, you know, and like, if we close the deal, I'll, you know, I'll send you, he's like, I don't care. Just please fix the house. You know, like that's all I care about. The roof shingles were flying into their pool, you know, so like the neighbors, you'd be surprised how much they know and how much they're going to tell you. Right. Cause so that's one point, but driving for dollar lists are so powerful. People overlook it because it takes time to build it, you know, but they're so powerful because you know that you're either dealing with distressed homeowners or distressed assets, or sometimes both, right? But when you drive for dollars, you know you're looking at a distressed asset, you know, so you got one of the two. If you're pulling a absentee owner list in, you know, a certain neighborhood, that's less likely, you know, because you don't know if either one are distressed, right? But when you're driving for dollars, it's a more targeted, powerful list because you know that at least the asset is distressed because you're looking at it, you know, and it's vacant or somebody's still paying property taxes on that. And if they're not, even better, right? To send them a mailer and try to contact them because they're in trouble. It's just taking up space, you know, and in Hawaii, we don't have much space, right? We have low inventory and the high demand. So every junk house that's sitting vacant, like we can bring that back to life and put it back in circulation in the market and serve the community, you know? So I would say do it all if you can, if you have the time, do it all. Just make sure, one thing I didn't do is I didn't track good when I first started. You know, I just was sending there. So I wasn't tracking my conversions, but I would say take the time to track conversions, you know. But the SMS blast, I would say that's the most powerful, when direct mail for me was before, but that was before everybody else started doing direct mail as well, right?
Yeah, totally. So I think that prompted a really good question. You know, say you end up finding, or you end up doing all marketing strategies, right? And you're rolling on all of those and you're doing really well. I think something that I've been continually trying to figure out and really fine tune and just, you know, iron out all the wrinkles is the very specific follow-up systems, because a majority of these leads that we do land on, they're interested in selling, but not right now. And, you know, it could be that their niece is wanting to graduate and they want to spend time in the house with them, or, you know, they want to spend 4th of July at the house before they sell it. So, you know, out of the thousands of reasons they don't want to sell right now, they just don't want to. But that still doesn't mean it's not a good lead, or a bad lead, excuse me. So one thing that I've definitely been dealing with is really honing in on a great follow-up system and tracking system as well, because I'm sure, as you know, this is really the game of follow-up. And so I guess my question to you is, you know, how many times are you touching these leads? How often are you following up? Is it really case by case? Where are you tracking all these leads? Is it through a system? Is it through a spreadsheet? Yeah.
I used to put in a simple Google spreadsheet that's updated live. And I wasn't the best at follow-up, to be honest. I would, you know, maybe once a quarter I would send, you know, I'll resend to the list. But to your point, like the people who say like, hey, I'm not interested, I'm not gonna sell now, that's fine. You know, don't spend too much time on them, because like really the number one thing in sales, like some people feel that like, no, like you gotta close, you know, and like jam it down their throat, hard closer, like that. I don't believe in that. Like I believe like the biggest mistake people make is they chase someone that's just not ever going to do business with you, you know. So you got to know when to just walk away. And so don't waste too much time on those leads, you know. And really, this is just a personal thing for me, is like I don't want to sell someone on buying or selling their house to me, you know. Like I've turned people away because I've told them, I think you can get much more if you just put it on the market. You know, you're not you're not distressed, where you have time on your side, so why not? You know, just put it on the market. Like if I come in to buy it, I'm gonna have to buy it at this price. You should at least put it on the market if you can sell it for $100,000 more than what I can, you know, what I can buy it for. Like I'm it's never really like it's more like I'm helping somebody, right? Because that's what we do. That's a service we provide. So I never want, it has to be a win-win, you know. And when you're dealing with a motivated seller, like which is only like 1% of the market, right? Like that's who we're helping, is motivated sellers. Like if they're semi-motivated and they're not distressed, they got time, and like I know that they could sell for way higher than what I can offer, I just tell them put it on the market, you know, to test it. If they need a referral from to one of our trusted agents, I can send them to our agents. But to your main point, or your main question, is I would follow up maybe once a quarter, but you'd be surprised like how many people save your marketing fees. Like actually the real reason why my head started spinning about the vacation rental side is like about a month ago, right when all this happened. When I was targeting short-term vacation rental owners, like to arbitrage, this was back in like 2017, I think, maybe 2016, 2017. I did a lot of mailers to the condotels out here. And then all of a sudden I started getting calls from that list I did like 3 years ago. And they were saying, hey, you know, I held on to your postcard, and they're interested in selling now. You know, so I was like, how come all of a sudden I'm getting calls from 3 years ago? And then I was like, oh yeah, duh. You know, like they're getting crushed right now, so they need help, right? So then, you know, now we start the conversation of like, okay, let's target that building. And with this one, we're gonna give it some time. I think I'm gonna give it at least a month or two to hit it again, because like I mentioned earlier, we're just too early. And I just wish I found that out, earlier. But the SMS, like, it's not very expensive either. Yeah.
Super cheap.
You spend like $80.
Yeah. Yeah, that's a very good point. Yeah, I mean, you make such a great point too. And I think really to just reiterate it, our job and I would even call myself an investor because I'm not, I really just work for Keikoa. But really what I've come to realize is his main role whenever he's dealing with these motivated sellers is that you're really just an advisor, right? You want to come into their situation and present them with all the options that they can go about doing and be like, okay, well, why haven't you listed it with your realtor yet? I don't really like people coming through my home. I don't have that time nor that patience. Well, why haven't you sold it to another investor? I really couldn't trust them. So really your job is to, at least from what I've learned with Keikoa, is to show them all the doors that they can go through, have them close those doors to have you end up being the last person. So it's a no-brainer for them. What I've realized is if I take that approach with, for example, like high equity absentee owners, people that don't need to sell, then I kind of find myself in a pickle where I'm like, well, clearly you don't need to sell right now, so why would you sell? So that's what I'm telling them. It's like, hey, it's, a lot of right now, or anybody on the market that's buying is in anticipation of the market falling. Basically, nothing really drastic really happened. Nonetheless, so there's definitely that fear in the market. So what I tell these, high equity absentee leads that come through saying, yeah, I'd be interested in selling, is like, hey, it sounds like, you want to sell, but right now is clearly not the best time. So if you're not motivated and you need to sell right now, then why do it, right? You're definitely gonna be able to maximize your dollars, right? Without being tight for another year.
I'm texting Dante.
Oh,
yeah.
Sorry.
No worries, bro. No, yeah, that's absolutely it. Like, sometimes it's hard, right? Because we want to close deals, but we always got to remind ourselves, like we're here to help people. That's what it comes down to. We help people, and it's not easy, in business sometimes, because we're aggressive, but at the end of the day, we have to make sure that we're not hurting nobody, not taking advantage of nobody. We're helping people, and that's I honestly feel that's the way we have been able to make it in this industry, and be here for a long time, because like you do something, something to hurt somebody one time, and that could be all it takes, and it just, at our core, we're not that type of people, and that's the culture we're building in this group. And that's why we make it a point to say it on every call, that this is the kind of group. The most important thing is the culture where there's abundancy, and everybody does right by each other, and we help each other. Nobody's competition, we're allies. We're all allies here, because we all can't do this on our own, right? So like, as soon as, and I think everybody on these calls, which is so amazing, is of the same mindset, because that attracts the same people to us, right? And like, as soon as someone might come into the group, and if they might see themselves out, because they see how we operate, where we share everything, we share all our resources and stuff. And when it comes to their turn to share, and they're holding their cards to their chest, or they're, it'll be uncomfortable for them. So much so that usually they leave on their own, and if not, then, Keikoa and I will make sure to pluck them out, because that shit's cancer, man. You know what I mean? Like, nothing can spread. Like, you gotta take that out quickly. It's just like operating any business or team. Like, the most important thing is the culture. And as soon as there's like one bad apple, like, you gotta, have them, they either conform or, they're out, because we're not gonna put that at risk to the entire group. So that's why, like, when you mention that, when you say that, and when we talk about doing right by people, that should always be number one, you know? And it doesn't mean you're going to do less deals, because we've done a lot of deals, you know, we're busier than ever. But we've turned down deals because we think that they can do better, you know, like it would be a disservice if we bought that house at the price we needed at from them. You know, we'd rather have the seller go and test the market. If they don't want the traffic coming through their house, and if they just don't want the headaches of dealing with all that, then yeah, of course, you know, but then it's at least it's a fair exchange, right? So
yeah. And even then though too, I mean, even if you refer them out to listing their home, it's like you can even work with a real estate agent to get a referral fee on that.
Yeah.
You know, for example, in our case, what we do is, you know, Keiko is the real estate agent. So it's like, I'll reach out to these leads and I'll say, hey, you know, if you want an opinion from another real estate agent, because I'm sure you have one.
Mm-hmm.
And just like everybody knows, it's like, if you don't have a friend that's a real estate agent, then you don't have friends.
Yeah.
So, I mean,
it always comes back around, whether you want to call it karma or, you know, anything else, it always comes back around. Like, let's say you're sending your leads to a realtor to close a deal, you know, and you don't even ask for a kickback or anything. Who is that realtor going to send her deals to when they, you know, or like his or her deals? She's going to send it to you, you know, like I've had realtors send me lenders and deals, you know, because I would refer my leads out. All my retail leads, I would just, here you go. Make them a lot of money, you know, and I don't ask for a kickback, although Dante did give me a kickback one time on a piece of land. I referred to him. oh yeah, remember that, Dante? Took 2 years to close, and then I'll tell you
that one took like a long time.
Yeah, like took 2 years. So like,
yeah,
one night we go to the mastermind meeting that we're in, and then Dante hands me a check. He's like, oh, here. And I was like, what is this for? He's like, oh, that deal, the land deal. I was like, I didn't even remember that deal. You know, I was like, bro, you didn't have to pay me, you know, but like, that's the type of people that, you know, I want to surround myself with, you know, and Dante helped me a lot when I first got started. Dante was there from the beginning when I was just pounding the pavement, and, you know, so like, I love it. You know, it's like family, you know, like it's not just business to me ever. I hate that saying where, oh shit, this is just business, you know, because it's not to me, right? Like I do care about the people that are around us. So that's just the culture that we're trying to build here. So I'd appreciate if everybody still on the call can help us, you know, police, you know, the group and hold each other accountable and have high standards for each other's morals and how we do business and how we work together, because it's important. I think it's the most important thing. And thank you, Dante, for that check. Yeah.
Yeah, no, I totally agree with you. I think, you know, the past year and a half that I've been working with Keikoa, the ecosystem that he's created is basically like guilted me into never wanting to leave. Just, that's perfect. I mean, he played it well.
Keikoa is a master. I'll tell you something about Keikoa, since I don't think he's on the line. Actually, he probably left his computer. But Keikoa is a master communicator, and he's a huge nerd. And that's why I love the guy.
Yeah. Phenomenal. Totally.
So much so where I would be like Keiko and I, if we're in a negotiation, you know, like I feel like we can be in any room, you know, and sit across anybody, because we're so opposite but the same. You know, we're same at the core, but the way he communicates and I communicate is totally different. Mm-hmm. And I'm more like straightforward. Let's talk about numbers, you know. And Keiko is really good at getting to the point without directly going to it, you know. And
so true. He's the most indirect person ever.
He's an amazing communicator, and so much so it's like a couple of times we leave a negotiation. I was like, man, they didn't even know like you're negotiating with them, because it's so smooth. You know, he puts people first, right? People over profit. So genuinely asking about how they're doing, what they got going on. You know, like it's never just straight to business. You know, so within like a minute, the friendship is built, you know, and then from there it's like, hey, how do we help each other? You know, what do you need? You know, and how can we help you get that? And what do we need? And how can you help us? Right. So yeah.
Yeah,
I hope you didn't hear all that. Doesn't.
No, that's too funny. I mean, honestly, I mean, we've gotten to a point where all that we try to have him do is just the negotiation and really that front end rapport with, you know, the key players being the seller's agent or the lead directly off market. So, I mean, he's definitely shown to be.
Well, he's the best to learn from. And like one day you're going to have teams under, you know what I mean? You're so young, bro. Like, how old are you?
19.
What'd you say?
19.
19, dude. You're so young, man. Like, one day you're gonna, you know, one day soon probably you'll be managing people, managing a team, you know, and like it's gonna be you at the front with, you know, having to deal with different personalities and how to lead, you know, and Kekoa is the perfect guy to follow. I'm excited for you, bro.
Thank you. Yeah. Yeah, all thanks to, you know, what you and Keikoa have done for everybody.
You are an
bottom of my
investor.
heart.
You are an investor, man.
Thank you. Hopefully soon. Well, I obviously don't want to take too much more of your time, but if anybody else has questions about off-market stuff or systems relating to it, you know, we'd love to talk about it. I'm obviously no broker.
I don't have any deals, but I just want to say, like Corey and Tomas, I love the attitude and the thing of like just helping the homeowners and the whole like mindset and approach. I just gotta say, I really, really love it. Like, you know, like just your whole attitude of just giving them their best option and just like, you know, just trying to help people. I love it. So I just wanted to say that. Awesome.
Daniel's another one.
You know?
I went to coffee with Daniel, like the first time we met, and then all of a sudden, like Daniel basically built out our whole back end system for our fund. He's a software developer, you know, and didn't ask for anything, you know, and I'm trying to give him, you know, I'm trying to like help him in any way. But like, yeah, I mean, you're an amazing guy, man. Thank you. Appreciate all that you've done for us, man. Like genuinely giving. Like that's, if I don't know if you guys read The Go Giver, powerful book. It's like, it's an amazing book. And I always thought that that's how business should be done, you know, and I never, until I read the book, it was kind of like when I first read Rich Dad Poor Dad, is like everything that I was feeling, but somebody else was it was somebody else's words I was reading, you know? So it's just confirmation for me, which is even more powerful. So like, I truly try to live by, you know, the Go Giver, you know, mentality. And it's been amazing. That's probably been the most important thing to our success, to be honest.
Yeah, and I think contrary to what everybody thinks is that you're going to be losing if you know, spill the beans on everything.
Yeah.
I think what's shown tried and true is that no, like it's the opposite.
Yeah, and I think that's just who I am anyways. You know, like, but like I can't imagine having somebody with the scarcity mindset, because it's such a burden having to kind of watch what you say or you don't say, you know, like, or what do you reveal or what do you not reveal. It's too much stress for me. You know, I'd rather just, I'm doing business with friends anyways. So like, I was gonna say, you know, whatever. I just give it all away. And somehow, like, it all comes back. And even if you don't expect it, you know, like, so it's a super powerful book. I think people sometimes will read it in the wrong point in their life, because it's not tangible information. Like Rich Dad Poor Dad is a little bit more tangible, you know, like everybody can relate to it. But the Go Giver it's basically teaching like how to change your mindset, right? And the mindset of giving first without expecting anything back. People are like, how do I do well doing that? You know, how does that? It's just like you know, like hocus pocus kind of fantasy stuff, but it really is powerful. And so some people, I think, they just read it at the wrong stage in their life or career. But I think everybody should read that book.
That's a book that you reread, you know? It's a really,
Yeah,
really
man.
short one.
I can't believe you're 19. Holy crap.
I know. I got a lot to learn though.
Oh, son. Don't tell him I said that.
Well, we've definitely heard a few things before. People, I mean, we had this client about a year ago that was like, are you guys together? I mean, honest to God, that's
Together? As in like
together.
That's hilarious.
Because we look the same, because everybody in our team has the same haircut, works out at the same gym. I mean, that's where I met Koa. That's where we met Chad, who's the newest guy in our team. And yeah, we look the same, we dress the same, so it's kind of hilarious how.
I'll never forget the first time when we were scouting the Seattle market, we went to open houses and this realtor, she sees Kiko and then she says, "You're well coiffed." And I was like, "Coiffed? Like, what is that?" You know, I had to look that up. I was like, wow.
What does
And
it
then after
mean?
I was teasing him, "Oh, you're well coiffed, bro." But no, you guys are alike. You guys all like, you know, have great style and like, yeah.
Well, when you have a shoe closet and, you know, a full master closet for all your clothes.
You see his man cave? You've been in his house, his man cave? Yeah.
Yeah, no, that's totally true.
Good times. We have a blast, man. What a
Yeah,
great-
well, hey, I mean, genuinely from the bottom of my heart, I mean, this is exactly what I was doing with Jessica as well, is that when she reached out to me a couple weeks ago asking about this off-market stuff, we jumped on the phone for a few days. I mean, just going back and forth, and I was just showing her everything that I was doing on that back end and just walking her through it.
Yeah.
So she could really confidently do it and not just, you know, be able to log in and just start, but actually explain
thank
to
you,
her
bro.
how to
Yeah,
maximize it. But I still would love to, you know, answer whatever questions, and if you have any insights or anything like that that you've gotten from doing SMS, like please let me know, because I'm definitely not the pro, nor have I gotten ultra experience with it. So I'd love for this to be a ongoing back and forth conversation on how we can maximize it.
Well, absolutely, man. Like she's teaching me, you know, so I was teaching her initially, and now she's teaching me what she's learning from you. Like it's awesome, you know. So, yeah, like I don't even know enough to be able to ask questions, you know. So like she's probably the one to ask the questions, and then I ask her, you know. But thank you for giving your time to teach her, you know, and we'll hopefully be closing some deals soon. Had to pump the brakes a little bit on that one because I just think it was bad timing. But I don't know why I didn't look into that first. I should have looked at the history of the sales in that building, you know, because it's a you can see it clearly, like where the market is, and it was at the top right before COVID, and then we just got the first comp post COVID, and sure enough, it's down like 20 grand, you know, from the last comp.
So I promise this is my last question, but I really just want to dive deep into that. So you're stalling, or not stalling, but you're waiting on really going full force with your off-market acquisitions in terms of the marketing until you
No, not waiting, just waiting in that building.
Okay.
Yeah, right now. Yeah, and probably in the short-term vacation rental space in general, because I'm guessing the other buildings are seeing the same. Like only now are we starting to see like comps come out one by one, you know, and probably should have targeted higher price points buildings, because these are studios, right? So like it's 200,000 ARV most likely. That means we gotta get it pretty low, you know, and so I rather go higher price points, but I think it soon there's gonna be some, you know, some people that need to get out.
Yeah, you know, unfortunately, I think in the Seattle market, we've come to really realize, we were just on the phone yesterday with our property management's lawyer, that company's lawyer.
Mm-hmm.
And she was basically giving us, you know, the entire lowdown on everything that was happening with the eviction bans. So that's definitely going to be really hard for our buyers that are trying to buy and holds anywhere from, you know, a small duplex up to, you know, a larger scale commercial building just because of the eviction bans. So Corona has definitely affected us in that way. And these people are even really strong buyers in terms of finances. So lending is not the issue, but it's really the eviction bans that we've really come to have stand in our way.
I don't see that sticking that long. I don't think so. Like those eviction bans, there's no way they can keep that up for too long. There's too much stress on the landlords, the owners. And one thing on yesterday, we have our weekly NPLA call. So it's with all like the bankers and the National Private Lenders Association. It's funny because they said like, oh, Starbucks came out and issued letters to all of their landlords across the world for all their real estate, requesting 1 year relief of rent payment. How crazy is that, you know? And like two of the people on the call, they have Starbucks as one of their tenants, you know, and one of them was like, yeah, I got that letter yesterday, you know, like these guys, you know, they don't want to pay rent for a year. How dare you, you know? And like the other guy came on and said, yeah, I got the same letter. He said, I just told him no. He's like, oh, it's like, okay, I'm gonna tell him no too then. So, and like, they're just pushing their weight around, you know, because they know how valuable they are to these landlords, right? Some of them are anchors in these commercial properties, and you know, one of the guys had an 8-year lease with them. He's like, I'll deal with them in 8 years, you know? Like, so yeah.
No,
I mean, it sucks to hear, you know, it's Starbucks. Come on, guys.
Yeah, right. A powerhouse out of anybody, you know. Yeah, I definitely
heard 24 Hour Fitness too was like about to file for bankruptcy. Might be a rumor. I don't know if it's a rumor or not, but I'm like, really, guys? You can't survive 1 month. You know, like things turn. You can't survive 1 month. You don't deserve to survive this. Like, yeah, go bankrupt.
And that's where Keikoa, Chad, everybody on our team works out.
I work on 24 Hour Fitness too.
Yeah. So it doesn't matter though. I mean, we'll just go to Keikoa's house and work out in his basement. So we'll be good. You know? We'll innovate, you know? But yeah, I mean, hey man, thank you so much for sticking around.
Yeah, no problem.
Just jamming.
I better get back to work. I'll check you guys later on the Facebook group. Don't forget to check in. Thanks, Loretta and Jim, for chiming in. It was great information. Appreciate it. Dante, Daniel, James, and I see you. Oh, Keoa, I see you, bro. I see you on here.
Hey, Corey. Hey, Corey. Corey.
How you doing, Corey?
Yeah. Hey, before you leave, I wanted your opinion on something. Like, I know you mentioned it before, but as far as like the market bottom, like, you know, I know you can't predict it or anything, but where do you think the bottom? You think the bottom is gonna be really soon, around next year?
Man, that's tough. I mean, nobody knows, right? But I have a feeling in the next few months, it's going to start to reveal itself. It has to. I mean, we can't stay locked up in, I mean, I don't know. California just extended to August, you know, with like they're opening some stuff, but I think by the end of the year, we'll be somewhere going down, unfortunately. Just how bad, you know, but like we were talking about earlier, I don't think it's going to be as nasty as people think, you know. Maybe it might get nasty for a little while, but I don't think I'm optimistic long term, you know. I think short term bearish, long term bullish for sure. Yeah. But we'll see. We will see.
I know one thing you can look at later on, that's what I'm going to be searching later once I think the market is bottom. Is that's how I bought my first property, is looking for HAP sales.
What?
So
HAP
sale? Yeah, military, those who got VA loans, it's the military short sale.
Oh, okay.
So that's when I bought my first property. It was a HAP sale in 2010. So that was like at the bottom of the market. And now HAP. HAP.
I've never heard of that.
Yeah, it's a military short sale for VA loans.
Oh, I thought the VA loans go to HUD. No.
No, I don't know, but we list it as a HAP sale.
Oh, okay. Really?
But,
You think the military there's going to be influx of why?
Because they're barely gonna show up, but when they show up, it's gonna be a really good deal because that's how I got my property, and now it's like 400,000. So I have like over 200,000 in equity.
Wow. Nice. Okay, so but what's the reason though?
For you know, they couldn't keep up with, you know, because the military, they're only here for a while and they gotta leave, so they can't afford the mortgage payments. And they don't want to, you know, as far as rentals, you know, if they can't rent the property for the amount that they owe, then they gotta sell, they gotta short sell.
Okay. Oh, interesting, man. Interesting. Okay. Well, I gotta take this call coming in. I'll check you guys later. Thanks for stopping in.
All right, thanks guys.
I don't know if Kiko's still on, but I'll text them.
Okay.
Hello, everybody.
Peace. Sweet. Well,